Hey, what's up, everyone? Anime Trader here. Just created a new channel. Been trading for quite a while. Thought that I could hop on here and help some people out. My trading model is very simple. It combines the strat and ICT concepts. So, understanding the core of the strat, 2-2 reversals, 1-2-2 reversals, time frame continuity. Broadening formation, yes. I don't tend to worry as much about that. Sometimes I will draw out a broadening formation, but I think with futures it gets a little subjective at times. And just know that if you're using a broadening formation, in my opinion, they're super helpful. I agree with that, but sometimes with futures trading, you've got you should have an eye on NQ and ES, understanding what's the term that I'm looking for there, uh, SMT divergence. So sometimes we got get this out of here. We've got this big, obviously great broadening formation here, right? Uh, Something like this, right? And sometimes you'll see, maybe ES comes down here and takes these lows out, but NQ doesn't. So, long story short, I don't focus as much on broadening formations as a true strat or might. I focus more on internal range liquidity and then looking for strat reversals out of that, either on the 5 minute or the 15 minute. Uh, and as you get accustomed to it, you can drop down to lower time frames if you want to, but really understanding time frame continuity as it pertains to the strat as well. And if you comment on these videos that you'd like me to go into more detail on that, I can. Um, but essentially, what we're doing is waiting for price to hit internal range liquidity and playing reversal out of that. A lot of people will wait for these fair value gaps to form, and that's fine. But if you're trading on the 15 minute, you won't get an entry into a fair value gap until up here on the 15 minute. Now on the 5 minute, there's probably entries to be had. But same thing on the downside here. Each fair value gap is just it's always created by a 2-2 reversal. It has to. There's or a 3-2 reversal, I guess. Um, there's no there's no way that can't not be. So right here, you've got a 2-2 reversal down on the 15 minute after taking previous day's high. So that's something you could have taken external range liquidity back into internal range liquidity. But again, you don't get tapped into a fair value gap until right here. You're gonna take this short right here, in hopes that it continues to go. You get stopped out. So that's something to keep in mind. Um, I love fair value gaps. I like them on the higher time frames to use those. The 1 hour and the 4 hours specifically, and I'll show you a powerful um, PD array. It's just a 1 hour fair value gap within a 4 hour fair value gap, and you seem to get nice plays out of that. So, um, for this video, this first one, I'm just going to go into what my trading model is, what I'm looking for. I took a trade this morning that took out a previous day high. So we'll go ahead and back this up. I typically get on the screens right around 6 o'clock, map some stuff out so that I'm aware of what's going on. Previous day low is down here, so we can go ahead and mark that out. These are your external ranges: previous day high, previous day low. You can call uh, this is a significant low here, but when I sit down, and I'll show you on my Twitter account, I kind of have in mind what my trading plan is going to be. So I have this, I kind of map out, okay, if price comes down into this level, am I gonna see a reversal back to the upside? And you can see that we took that here. Again, I trade micros, less stressful. You can still make good money on them. You know, this trade I took 5 contracts to the upside, scaled out. I got to get better at holding positions, but I did hold a runner and got stopped out. I don't know where previous day high was up here, so I got stopped out somewhere up here for 100 points. So again, I sit down, I kind of map out like, okay, here's a 1 hour fair value gap within another 1 hour fair value gap. So typically can find a good move there. There was high impact news this morning. So, and on the 5 minute, I'm on the 15 right now. So that's really my pre-market analysis. Mark out um, internal range fair value gaps on a higher time frame. This 1 hour fair value gap within a 1 hour fair value gap, and then I wait and see what type of reaction we get in these areas. Now, when it comes to the strat concepts, let me pause it right here. This is just a midnight open line, so kind of use that as a benchmark. But at this point, we've got high impact news at 6:30. We see a big drop. Obviously, we're toying around in here. I think I actually took my entry on like a 3 minute 2-2. But for beginners with this model, I highly recommend staying on the 5 and the 15 minutes. Just going to keep you out of trouble. It's going to keep you from over trading, keep you from getting stopped out as much, and still provides great entries. So right here we've got, you can see the market didn't take out these lows. We had an inside fiver down. Now you would have gotten stopped out there. Because we're in this internal range, I'm thinking bullish. I'm not thinking bearish, and that's where things get dicey with the strat and the ICT people. But for me in this model, as long as I have a plan of, okay, we should be going from internal to external, I'm looking bullish here. So I ended up taking the trade somewhere down in here. There was like a 2 minute or a 3 minute reversal that I felt confident in after taking these lows. And I held this. I think there was a 5 minute that went 2 up in red at some point. But I ended up getting stopped out on my runner right at market open, like right here. I moved my stop up to right here, got stopped out. And then you can see the market begins to tank again. Now, here's something to note. Just because we're back in this range here where I took my long entry from initially, doesn't mean I'm just getting back in here. I need to wait for some type of reversal on the 5 minute. And I had stop orders placed for a reversal on this inside fiber here. Obviously the hour is bright red, so they're selling. We end up going outside day, which is just a 3 bar, and then I think we did hit this one just barely, and then we got a reversal back to the upside. So a 3 Momo hammer 2 up, and on the 15 minute, at this point I was done trading. I didn't want to trade anymore, but here's a 2-2 hammer on the 15 minute to give you an entry. You can place your stop down here or down here. ES at this time was in internal range liquidity as well after going outside day. So by default, we know that we have a broadening formation already. So you can risk this low and see where the market takes you. 2-2 reversal back up to the 15 minute. We tip into internal range liquidity. And obviously we know what happened today. It just kept going and going and going and going. So at this point, everything's bright green. That is something to keep in mind. You want to make sure you have at least 4 time frames going in your favor, I use the 5, the 15, the 30, and the 60, and then for the higher time frame, the day. So on the day, we know we're break green. Here's midnight open, and even though we're in internal range liquidity here, we get a 15-minute. What looked like a 2 down here ended up going 3. You don't want to be shorting something that's break green on the day. So that's really it. That's the model. Internal range liquidity, mark those out, and look for reversals from strat concepts towards your bias or your game plan. Please go check out my Twitter. It should be linked in my YouTube bio. Would appreciate the support, and I'll be doing a lot more of these videos. Let me know if you've got any questions in the comments below.